You are listening to chartingwealth.com for Tuesday, the 22nd of September, 2015. We continue to watch the market wander. That's about the best I can tell you as we zoom into our two-day chart on IYY, which is the total market index. We drew this purple line, and for those of you listening by audio, I drew a purple line around the $100.60 mark or so. Well, on Thursday, when the Fed made its announcement, the market went up past the line that we drew, and then over the last two-day candle, ending here on the 21st, the market has fallen below. Technically, IYY was up, that is, the total market was up 0.45%. That's not even quite 0.5%. And what we see happening is the market did cross over going up after the candle on the 15th of August, and it topped out and has begun a downward move potentially, although it is technically crossed over going up on the two-day chart. We do have a red candle, and again, we are technically in an up move. That could be happening. If we look at the 4-hour chart, we see that it crossed over at the end of the day going down. The derivative oscillator has flipped over going down. The big chart's still up, little chart's down. As we talked about earlier, if the little chart switches back over and starts to move up, that is the half-day chart, that is our prime time to look at getting into an up move on the market. Now that's of course the total market. So let's go back to our two-day chart, and we're going to range back. We're going to look at the S&P 500. Now, what is that? Well, that's the Standard & Poor's 500. It's 500 big stocks. What is it doing? Well, it also has started to lose some of its steam. Now, the derivative oscillator is still moving ahead on the two-day chart, getting up stronger. The MACD appears to be languishing pretty much the same over the last 2 or 3 days. We do have a red candle. Now, if we look back, and again, we're technically up. If we look back at the 4-hour chart, it has crossed over going down, crossed over coming into the morning on the 21st. And it is down now. It is not going below about $195. So it was technically up today 0.52%, but it has crossed over on the 4-hour chart going down. What does this mean to us? Well, it means that we need to watch and see if the SPY flips back over going up on the 4-hour chart, which is the chart I'm looking at right now. That would be a signal to you to get into SPY. Now, what are we talking about here? Are we a stock calling service? Absolutely not. Our advice is for all of you who follow us on a daily basis, who have opened your brokerage account, put $1 million or so into your virtual trading account, and are learning how to trade. We are not a stock calling service. We're an education firm, and hopefully you're getting educated. Okay, and if you don't know how to read a stock chart and you want more information, go to our website. Follow us on Facebook and Twitter. We have all sorts of great training there. We'd love to hear back from you about more things that you need to follow the market. The number one thing you need to do is listen to us every day, and also listen to our weekly review and forecast, which comes out usually Sunday evening, sometimes as early as Friday. It's for the week beginning Monday of every week. It would have come out on Monday of this week, the 21st. So let's continue to push through. So we're waiting to see if this is going to roll over. The short chart's going to roll over and go up like the long chart is currently showing. If that indeed does occur, then that would be a time for you to get in on a virtual trade on SPY. Now, if it continues to move down and we see the long chart, the big chart flip over, then of course we've got confirmed down moves if that occurs. Let's go to the Qs, which is the NASDAQ 100, sometimes called the cubes. It is not moving down to the extent that we're seeing the total market in the Standard & Poor's 500. It was up today, technically 0.31%. We do have a red candle forming up over the last day. We do have a greater divergence, which means that the move is continuing up as far as the indicator goes, and the derivative oscillator has heated up even though the market price has not done that much. Now, if we revert out of this chart to the 4-hour chart, you can see that indeed the 4-hour chart did cross over going down at the beginning of Monday the 21st. And so technically we have the 4-hour chart being in a down move and the 2-day chart being in an up move. So what does that mean? Well, of course, if we see a resurgence of the up moves, crosses back over going up, that's your peg to look at getting into a play on the Qs. That is the NASDAQ 100. Again, getting into a virtual trade on that. So continue to watch these things. Pay attention to what's going on. Listen to us every day. Start learning how to make money in the market and how to follow stocks. Now, lastly, let's range back out to our 2-day chart. Let's go to gold. What is gold doing? Well, if you look at the 2-day chart, gold is looking pretty strong, although it was down 0.62% today. The 2-day chart does not look anything but strong. We broke our trend line that had been established over about an 8-day period and started moving up back on the 17th. Now, if we revert back to our 4-hour chart, what do we see? Well, we see gold looking like it is topping out somewhat. It hasn't moved above its highest move since back on Friday the 18th. It has slid sideways, and again, technically down today 0.62%. What do we like using to follow gold? Well, we love our 4-hour chart. It crossed over going up back on the 16th. If you would have jumped into gold then, you would have seen some decent up moves since then. What is it doing right now? Well, we see the derivative oscillator is losing speed. The MACD appears to be converging somewhat. Not super fast or strong, but continue to watch and see if gold is going to hold at a floor somewhere around 108 or if it's going to drop below that and start moving down markedly. Again, the indicator, the MACD, the moving average convergence divergence on this 4-hour chart seems to be a great one. It has given lots of folks really, really good indicators. So again, if gold starts moving down and you're doing virtual trades on gold, what would you do? Well, if you were in this up move, hopefully you already took your profit. If not, you would get out if it flipped over moving down, particularly on this 4-hour chart. And what would you do? Well, you could get into an inverse gold exchange traded fund. There are plenty of those. Look that up if you don't know the symbol of one. Again, you can make money in the stock market and in commodities on many of these indexes or ETFs in inverse funds. So they go up when the price of the commodity or the index goes down. Isn't that interesting? A little level of sophistication there. A lot of people don't deal with. So as you train, as you learn, consider those things. Well, that wraps us up for the day beginning Tuesday, the 22nd of September. Hope that this has been interesting for you. We love to hear from you. Follow us on Facebook and Twitter. Give us a shout out with an email. Go to our website, chartingwealth.com. Sign up for the newsletter and receive this information every day in your email box. Take care. Wish you the best in your investing, trading, and education.